Auto trendline indicator strategy with RSI and volume analysis. Combining the auto trendline indicator, relative strength index, RSI, and volume analysis can create a powerful trading strategy. This approach helps identify key trends, overbought, oversold conditions, and significant price levels with the highest trading activity. Below is a breakdown of how to integrate these tools effectively. 1. Auto trendline indicator. The auto trendline indicator automatically draws trend lines on a price chart, identifying key support and resistance levels. These trend lines help traders visualize the market's direction and potential breakout or reversal points. Uptrend. A series of higher highs and higher lows with the trend line acting as support. Downtrend. A series of lower highs and lower lows with the trend line acting as resistance. Sideways range bound. Price moves between horizontal support and resistance levels. How to use. Look for price bounces or breaks at the trend line for potential entry or exit points. Combine with other indicators, like RSI, to confirm signals. 2. Relative Strength Index, RSI. The RSI is a momentum oscillator that measures the speed and change of price movements. It ranges from 0 to 100 and is typically used to identify overbought or oversold conditions. Overbought, RSI greater than 70, indicates a potential reversal or pullback. Oversold, RSI less than 30, suggests a potential bounce or upward movement. Divergence, when price and RSI move in opposite directions, it can signal a trend reversal. How to use. Use RSI to confirm trendline breaks or bounces. Look for RSI divergence to anticipate reversals. 3. Volume analysis. Volume is a critical component of technical analysis, as it confirms the strength of price movements. The range with the largest volume often represents a significant support or resistance level. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. High volume zones. Areas where the most trading activity occurred, indicating strong interest. Low volume zones. Areas with little trading activity, suggesting weak interest. How to use? Identify the price range with the highest volume, e.g., using a volume profile indicator. Use this range as a key level for potential breakouts or reversals. Strategy. Combining auto trendline, RSI, and volume 1. Identify the trend. Use the auto trendline indicator to determine the current trend, uptrend, downtrend, or range bound. Focus on the trend line for potential support or resistance. 2. Analyze volume. Identify the price range with the largest volume using a volume profile or histogram. This range is likely to act as a strong support or resistance level. 3. Confirm with RSI. Check the RSI for overbought, oversold conditions or divergence. If the price is near the high volume range and RSI is overbought, oversold, anticipate a reversal. 4th. Entry and exit. Buy signal. Price bounces off a support trend line, RSI is oversold, and volume confirms the move. Sell signal. Price rejects a resistance trend line, RSI is overbought, and volume confirms the move. Stop loss. Place below the trend line or the high volume range. Take profit. Target the next key level or use a risk-reward ratio, e.g. 1 to 2. Example. Scenario 1. Trend identification. The auto trendline indicator shows an uptrend with price consistently bouncing off the support trend line. 2. Volume analysis. The volume profile highlights a high volume range between $50 and $52, indicating strong interest. 3rd RSI confirmation. RSI is near 30, oversold, as price approaches the high volume range, suggesting a potential bounce. 4th. Trade execution. Enter a long position when price bounces off the trend line and RSI moves out of the oversold zone. Set a stop loss below the trend line and take profit at the next resistance level. Thank you for watching the video so far. I hope you can make the most of it. Watch the video related to the strategy.